Hi, and welcome to the CDFA Hotline. My name is Kristen Sharon, and today we're talking about one of the biggest and most emotional decisions people face during divorce, and that is what happens to the house. For many couples, the home is the largest asset that they own, and it carries a lot of financial and emotional weight. Because this decision is so important, we thought it would be helpful to bring in two professionals with different perspectives to today's conversation. So, joining us today is Lori Hawkins. Lori is a certified divorce real estate expert at Premier South Real Estate. Lori specializes in helping couples sell their home during divorce, often in complex or high conflict situations. We are also joined by Chris Bruiser with Mutual of Omaha. He is a certified reverse mortgage professional and a nationally recognized speaker who helps retirees and homeowners explore how home equity can be used in retirement income planning, including options that may allow someone to remain in their home or purchase their home without mandatory monthly mortgage payments. So, thank you so much for joining us today.
Thanks for having
Thank you
me.
for having us.
Um, so today we are also going to look at both sides of this question. So when is selling the home, when does that make sense? And when may there be options to stay in the home? I think this is going to be a really interesting and helpful conversation. But for those of you who are new, the CDFA hotline gives the public the opportunity to hear from professionals in the divorce and financial industry and learn more about the divorce process. And while we will be discussing divorce and financial topics today, we cannot provide personalized legal, financial, or tax advice. Every divorce situation is unique, and laws and guidelines vary by state. So, nothing you hear on this show should be construed as legal advice, tax advice, or financial advice. This show is educational, it's not advisory, and our goal is simply to provide helpful information and point you towards resources and professionals who can help you make informed decisions. That being said, I think we're going to be able to share some great information with you today. So, Lori, I'd like to start with you. The house is often the most emotionally charged asset in a divorce. From your experience working with divorcing couples, what are some of the biggest challenges you see when it comes to deciding whether or not to sell the home?
My goodness, it is very emotional. I get this more than anything when I am first contacted either by an attorney or by a couple that are divorcing. Typically, but not always, the lady that lives in the house, the woman, the wife, um, says she wants to try to keep the home because there is so many emotions attached to that. And my thing is to always send them number one to someone like Chris or another lender that can help them see number one if they even qualify, but two, is it worth it? I mean, that's what it all boils down to because divorce is so much about the finances, and it is so imperative for people to be able to step back from the emotions and to be able to look at the numbers. So that is like the first thing that I always try to address.
Chris, your work approaches the home from a very different perspective. Um, Instead of helping people sell the home, you often help them explore ways they might be able to stay in it.
Sure. Well, thank you again for having me. As Lori said, there's a lot of emotions involved, but you have to look at the financial side, as well. Um, sometimes that home might have stairs. It still might have a big yard with a lot of maintenance, and maybe that home is not really age appropriate, even though there might be emotional attachments to it. But by all means, if it's safe and healthy for someone to stay at home, one of the great strategies, especially in gray divorce, in divorce 62 and over, is, in divorce, both couples are going to be working on typically a little bit less income, right? And probably less liquidity. And so being able to stay in that home and not have a monthly mortgage payment can be a big decision, right? That could really help facilitate staying at home. If you can eliminate a monthly mortgage payment or be able to purchase a new one without a monthly mortgage payment, that really can be a game changer that can really provide an amicable solution for both parties. And so, if it's safe and one person wants to stay at home, we can help them do that without taking on a mandatory monthly mortgage payment.
Well, and I think this is why what Lori said earlier is so important that you need to go and speak to a professional such as yourself to find out what your options are um, before you go down this road. Because really, in a divorce, the first decision that needs to be made is are you keeping the house and who's keeping it, or are you selling the house? And it's really hard to move forward until that decision has been made. And how you're going to pay for that is really the next question. Okay, so we have Mark from Dallas, and Mark from Dallas says, with all the headlines about rising housing costs and changing mortgage rules, what should someone what should someone who's going through a divorce right now know about the real estate and the lending environment? For someone listening today who is just beginning the divorce process and worried about the house, what is the first conversation that they should be having?
Well, I feel like they need to find out what the value of the home is. That can be done. I can do a market analysis as a realtor. You can always pay to have an appraisal done, but you need to find out what it is because not only are you going to have to refinance the home if both people are on the mortgage, but depending on what your consent order may say or your separation agreement, you may also have to buy out their portion of the home, which is going to make it even more expensive to do, and especially with the higher interest rates. So the first thing I feel like they need to do is to get a value for the home.
So, Chris, talking about what's going on with mortgage rates and what's
Mhm.
going on with the real estate market in the world today, what options could be available to someone who needed to buy out the home from their spouse if they wanted to stay?
Sure. Well, and again, let's don't forget that bringing in the financial planner into the equation is obviously a very important part of this as well. So just know that I work very closely with the financial planners to see what financially works well for either one party or both parties. But in my special area, which is gray divorce, and again, I don't do conventional lending, so I don't want to talk too much about things that are not in my wheelhouse. We have some great professionals who do that, that are members of IDFA and our CDFAs. But back in 2010, before the reverse mortgage strategy came out, in its simplest form, I had a gentleman who wanted to stay in his home, and he owed his wife a $250,000 payoff. And he did not want to dip into his retirement accounts and he wanted to stay in the home. So he was actually able to do a Heckham lump sum reverse mortgage. He was able to take $250,000, pay off the departing spouse. He was able to preserve his investment portfolio and he has no monthly payment and was able to stay in the home. So using a Heckham to help facilitate paying off the departing spouse while one spouse wants to stay in the house without a payment can be a phenomenal solution in my world of gray divorce.
Well, and I think that's something that people don't realize. And one of the reasons why I wanted to bring you on today is that there are options out there that people may not have heard of and may not be aware of. And until you start exploring these options, you could be limiting yourself in ways that you don't need to limit yourself.
Correct.
So, Lori, tell us if you are a divorcing couple and you do decide to sell your home, what do you need to be thinking about? What kinds of conversations do you need to have with your divorce professional and about the financial aspects of moving and
Yeah.
staging the home and timing costs? What would you like divorcing people to understand about what's involved in listing their home timing
And
wise and money wise?
yeah, I don't even know how much time we have, but probably enough, not enough for me to cover this thoroughly. There are so many important things. First off, you need to get your realtor involved very early because selling a home through a divorce is completely different than selling a home in the traditional way. Typically, the couple is not even speaking to each other. Things are having to go through the attorney, which means it doesn't move as quickly as maybe a traditional sale may be. But one thing that you have to remember is whether you're getting having repairs just to prepare the home to get it on the market, or the repairs that may come up during an inspection that a potential buyer may put in. Address who is going to pay for those repairs. How are you going to do that? Because that is going to save you a world of time and hurt down the road, if that can be decided. Another thing is to make sure it is very explicit in your court order or in your separation agreement on how those proceeds are going to be distributed. If there is any debt that needs to be paid off, the more precise you can get about the home, anything to do with the home that can be put into those agreements early on while everybody's doing the negotiating, that's the time to do it.
That's great advice. Okay, so Stephanie from Tampa, she wants to know what are the biggest housing mistakes people make during a divorce that they regret 5 or 10 years down the road? From each of your perspectives, what are the most common mistakes that people make? Lori, do you want
Lori,
to
I'm
start?
gonna let you
Yeah,
handle
yeah, I
that.
can. Yeah. Um, Honestly, keeping the house. A lot of times, I mean, like I said, they are going on this emotional adrenaline and want the house, even when they can't afford it or they just want to keep it holding on. And then they realize that they should have let it go.
Yeah.
One of the things that I cannot stress enough if somebody wants to keep the house is please have an inspection because you know what is wrong with the house. There may be things, cracks, things that you don't see that's underneath the house in the crawl space that's not causing you problems right now. But once that judge signs off that that house is yours, it's going to become your responsibility and it can be a lot of money. So if you're wanting to keep the house, lay out the $500 to have a professional inspection done.
Well, Chris, this is a good segue to you. So, if someone is getting a divorce in their 60s and they want to stay
Mhm.
in the house, but they need extra monthly income, what options should they explore before they decide to keep the house?
Sure. Well, again, working with their financial advisor obviously is really, really important, having that cohesive relationship. But again, from my perspective, using the house equity, using it as a line of credit or using it as an income vehicle through a home equity conversion mortgage, again, allows them to be able to use that equity to supplement their retirement income without drawing down from their investment accounts, without creating unnecessary taxable events. And so there are some very strategic ways that this can be utilized. Again, getting rid of a monthly mortgage payment is a way to inherently create income because if you can get rid of that payment, that's additional income that's back in your pocket. I will mention that speaking of mistakes, I had a situation recently where a gentleman wanted to stay in his home and his advisor recommended that he use a traditional home equity line of credit to pay off the departing spouse. Well, those payments have adjusted upwards. And so now he's having a difficult time making those payments on that home equity line of credit. So now we are actually paying off the home equity line of credit with a HECM reverse mortgage to get rid of that payment. So really, he said to me, I should have done a HECM at the beginning instead
Mhm.
of taking out the home equity line of credit. So in my world, that was a mistake that somebody regretted, where the HECM would have been a great solution at the beginning versus later down the road.
For those of our listeners who aren't familiar with a HECM or a reverse mortgage, in I understand that the description can be complicated, but in very simple terms, what is a reverse mortgage?
So a reverse mortgage is really no different than a home equity line of credit. It's a home equity loan. The difference is you have to be at least 62 or over for the FHA. The FHA reverse mortgage is called a home equity conversion mortgage. It's been around since 1988, completely regulated and insured by FHA. A lot of people don't realize that reverse mortgages are completely regulated now, but it's simply a home equity loan that's designed for people 62 and over. And the primary difference is that a monthly payment is optional. You're not required to make one, although you can make a payment at any time without a penalty. So for people 62 and over or in retirement who might typically be on a fixed income, this is a great way to be able to access the equity in their home without the obligation of making a mandatory monthly payment. That's it. It's just a mortgage. The bank does not get the home. The bank does not want to own the home. It's simply a home equity loan that does not require a monthly payment. Plain and simple.
When people are going through a divorce, Brian from Phoenix wants to know what should they know about selling the marital home so that neither spouse ends up making a costly financial mistake? Lori, what would you tell someone who made the decision to sell their home? How how would you advise them to save money during the home sale process?
As I mentioned before, it's completely different, right? Selling through a divorce. I am particularly aware that money is much more of a factor during a divorce because most of the time people have gone from one household to two households.
Mhm.
So there are a lot of repairs that I may ask a traditional couple to do to bring a higher value that I would never even bring up to a divorcing couple. I I choose to price it more as is, in an as is state, knowing, realizing, explaining that we realize that there are some things that need to be done, but the money just isn't there to do it.
Mhm.
So, that's probably one of the biggest things with divorcing.
Well, I think that we have shown our listeners today that whether you decide to sell the house or whether you decide to keep the house, it is incredibly valuable to start the process with professionals such as yourselves so that people are getting the right information that they need so that they can make good decisions throughout this process. And that's what I love about certified divorce financial analysts, what we do in a divorce, Lori, what you do in a divorce, and Chris, certainly how you bring these unique solutions that I think most people don't even know are available or out there unless you go out and you get that education. And so that's why it's so important to involve additional professionals besides just your divorce attorney in the divorce process. And so thank you so much for coming on today. I think that this is really going to help a lot of people because again, what you're going to do with the house is really the first step in moving forward with your divorce settlement and to have professionals such as yourselves that people can receive guidance from, I think is so valuable. So I want to thank Lori and Chris for being with us here today. If you want to reach out to Lori, you can find her at Lori at divorcerealtorexpert.com. And if you want to contact Chris and learn more about reverse mortgage options to see if this could be an option that could be available to you, please reach out to him at cbruser, CBRUSER at mutualmortgage.com. And if you're looking for additional information about divorce finance, please check out our website at www.cdfa.com. Thanks for being with us, and we'll see you next time.